Hello, do you have a stocks and shares ISA? How would you feel if the taxman took away 40% of it? Unfortunately, if you've done well and built some wealth, that's exactly what might happen when you die. Because despite being tax efficient in so many other ways, your ISA could be subject to inheritance tax. That means that when you die, your family or beneficiaries could be landed with a 40% tax bill on your ISA, unless the beneficiary is your spouse. Many investors unwittingly fall into this trap. But for experienced investors, there's still a way to mitigate this. And no, you don't have to sell your investments and give the proceeds away. Let me explain. Since 2013, you have been able to invest in AIM stocks through your ISA. Many AIM stocks qualify for a long-standing tax relief called Business Property Relief, BPR for short. BPR was originally designed to allow family businesses to be passed on through the generations. Over time, it had been extended, so now many AIM shares, as well as unlisted businesses, enjoy that perk. What could this mean for you? Well, if your ISA is invested in BPR qualifying AIM shares held for 2 years and on death when you pass it on to your loved ones, they get relief from inheritance tax. Under current rules, you could pass on an AIM ISA portfolio completely IHT free. From 6th of April 2026, IHT relief will still apply, but at the reduced rate of 50%. In other words, whomever inherits your AIM ISA portfolio would have to pay IHT at 20% rather than 40%. This applies whether your ISA is worth £20,000 or over £1 million. There are no limits. Unlike some forms of IHT planning, everything remains in your control. If your circumstances change and you want to sell those investments, they're yours to do with as you wish. Bearing in mind, the amount you withdraw would no longer be sheltered from inheritance tax, and the value of your ISA will depend on performance. AIM shares are less liquid than ordinary shares, so they will usually take longer to sell. Not all AIM shares qualify for BPR. So how do you know which do? How could you select the right shares? The solution could be simple. You could transfer your ISA or part of it into a professionally managed AIM inheritance tax ISA portfolio. When you do, you continue benefiting from the standard ISA tax benefits, tax-free growth and no further tax on income. Then after 2 years, the inheritance tax relief should kick in. So what are the risks? Like all stocks and shares ISAs, AIM portfolios put your capital at risk. They could fall as well as rise in value, so you could get back less than you invest. An AIM ISA portfolio may also be more risky and less diversified than a conventional, well-diversified stocks and shares ISA portfolio. The shares also tend to be more volatile. And because AIM shares are much less liquid than those listed on the main London Stock Exchange, it will usually take longer to liquidate your portfolio. So AIM ISA portfolios are not for everyone. Business property relief will only be available if portfolio companies maintain their qualifying status. Should they lose it, IHT relief would be lost too. That said, for those comfortable with investing and the risks, AIM ISA portfolios could be an option for experienced investors to reduce IHT on their ISAs. If you are an experienced investor and are happy to make your own investment decisions without advice, you can find out more about AIM inheritance tax ISAs on the Wealth Club website. Please remember, tax rules can change and tax benefits depend on your circumstances. And if you are unsure, please do seek advice.